Good morning, everyone, and welcome to our webinar about year-end accounting, planning, and preparation. I'd like to go through a couple housekeeping items before we get started. First, you can maximize or minimize the webinar pane during the presentation by using the red and orange arrow buttons. During the webinar, we also encourage you to ask questions, so if you have one, feel free to go ahead and type it into the question box in the webinar pane and make sure to click submit. Our presenters will answer the questions as time allows at the end of the webinar during the Q&A session. Second, to ensure good audio quality, please check the settings to ensure you have the correct audio option selected. If you're using a telephone, please click on the phone call audio option, or if you're listening through your computer, then please click on the computer audio option. Our session this morning does qualify for CPE, so just a few reminders about what that means for you. You must use a personal computer, no smartphones, and log in with your own information and unique URL. You have to be logged into our online software for at least 50 consecutive minutes within the scheduled time frame of the webinar. Also, you have to actively respond to at least 75% of our polling questions. We have 4 questions today. And at the end, you have to complete an evaluation survey. Today, we have David Miller and Scott Schwartz with us. David is a partner in our outsourced finance and accounting practice group. He specializes in providing superior client service and CFO support to emerging and growing businesses in the franchise, technology, nonprofit, and entertainment industries. Scott is a recently promoted partner in our CFO advisory practice, where he helps privately held, pre-IPO, and public companies handle a wide array of business evaluation needs, equity compensation challenges, and technical accounting issues. Now we're going to quickly go over our learning objectives for today. So we're going to recognize legal changes in employee classification that could affect your business. We're going to review filing dates, requirements, and penalties, as well as identify areas for improvement in internal controls and compliance. And we're going to highlight best practices for policies and procedures documentation. So from there, we're going to hand it over to Scott with our first polling question.
Thanks, Victoria, our wonderful host. Our first polling question: what are your top operational concerns heading into year end? And you can select all that apply. New or updated tax reforms, understanding total compensation and how you compare to the market, preparing for your 2018 year-end audit, cash flow requirements, which is always a big one, and budgeting and planning for 2019. We'll give another about 10 seconds. Just as a reminder, this is the first one, so hopefully you fill out the first one, but you have to fill out 75% of the questions in order to, and we have 4, just so you know, so just a little insight to the future. You have to answer at least 3 if you want to get some credit. So let's go ahead and close that poll. And it looks like about 65% of you are looking for some help in understanding the new and updated tax reforms. Well, that's great. Hopefully you've at least learned some about what that impacts you in 2018, but obviously then filing your return in 2019 for your 2018 fiscal year, that's important. We have about 51% talking about their audit, which is always a pain, and then budgeting and forecasting at 49%, budgeting and planning, I should say. Great, thank you very much. And I'm going to turn it over to my co-host, David, to talk a little bit about the CFO Evolution.
Hey, good morning, everyone. And thanks for handing that over, Scott, and Victoria, thanks for getting us kicked off. So really wanted to start today with an overview of our CFO Evolution Approach, which is really driven heavily by VUCA. And hopefully many of you know what VUCA stands for. So VUCA stands for volatility, uncertainty, complexity, and ambiguity. So volatility is really about really defined as rapid and unpredictable change. Uncertainty really defined as the inability to know everything fully. Complexity basically refers to many parts that are interconnected and interdependent, and ambiguity, which is really the quality of being open to more than one interpretation. I'm sure that resonates with a lot of you today. This environment really challenges our CFOs and our business and financial leaders to adapt to these changing markets, right? So we've got tariffs out there right now, low unemployment, talent difficulties and recruiting talent, and it really forces us to set a course for the next few years without knowing all the variables. Right, as you're looking ahead, you're looking forward, and you don't know everything that's going to happen. You do your best to plan it, and it's really important to be planning out for next year to anticipate as much of that volatility and complexity as possible. And this is
David,
really,
I was just going to say, one of the big items I think that you didn't mention is technology, right? And the rapid growth and change of technology. And we're kind of going to talk about some of that today, and being prepared and having procedures in place. But I think that's the other big one. We talk about sort of the regulatory environment. We talk about the employment, and then the rapid change of technology as well.
Yeah, it's great because we're going to talk a little bit about cybersecurity and some of the factors there. And it's really, there's changes out there. There's happening every day, breaches of security. It's really important to plan for that. And it's also really an opportunity for those of you who are on the phone, to really become an impact player within your organization, because you're in a place today not only to focus on people, process, and technology, but really begin to become an innovator and an influencer of the organization and how they respond to a lot of these market changes that are happening, because they're not only affecting the accounting group, but they're also affecting your business as a whole. So without further ado, let's move on and talk a little bit about the people side of things and some human resources impacts that may impact your financial decisions some of which have already taken place and some of which will be coming forward into next year. So the first thing I'm going to talk about is recruiting compliance. Now, Scott, I'm sure you've been out there recruiting for people. It's a big something that we're involved with every day. And one of the real challenges has been now in the recruiting is you're really prohibited from asking about the salary history from someone, from a candidate. And really, this ban also applies not only to their salaries, Scott, but also to all forms of compensation and benefits. It may be that. Yep. Have you run into this?
Yep. We've run into it. And I think the goal, right, is to not, and again, you can have different, right, thoughts on whether you are pro or con on this, but I think, right, David, the goal was to sort of stabilize the market and not keep salaries down, but have market rates, allow people to adjust to market rates. And specifically, I think the gender equality that is out there.
Yeah, and I think it's really important. You still can provide pay scale and ranges of pay. So it's as CFOs and controllers or financial people out there on the phone, it's really just important, to really think about how you're going to approach that with candidates and to really, make it a good experience for both the candidate and for you coming into the organization. One of the other big changes that's going to be happening next year that definitely impacts the bottom line is hourly rate changes. So last year, 18 states began 2018 with higher minimum wages. This year, 17 states will increase their minimum wages in 2019. So for example, in California, if you've got 25 or more employees, the rate's going to go from $11 an hour to $12 an hour effective January 1. And this is the eventual progression towards the $15 an hour rate that's been set as a goal, a national goal, and across many states. So for California, we'll get there by about 2022. One of the other areas that had come up in previous conversations we've had on these webinars is the overtime rule. Well, here's the good news. The overtime rule hasn't really changed, right? There was a lot of discussion about it increasing, the dollar level increasing. That's not going to happen. And I think the other one of the big changes, though, it's coming up and has been emerging is cryptocurrency. So as you're out there getting ready for your W-2s, and we'll talk a little bit more about some of the compliance issues there, for next year, cryptocurrency is going to be a factor on your W-2s, whether it's using cryptocurrency for stock-based compensation, whether you're using it in some shape or form to pay employees or as a benefit to employees. You gotta anticipate that as you're putting your W-2s together for next year, right? And then the other one. I was just
going to add to that, right? I mean, we had a client recently that was granting is a crypto company granting some sort of crypto compensation, and yeah, it's the government is looking at that as property and something that we have to there has to be some tax related to that. So that's a great call out.
Yeah, we had a couple clients last year that we actually had to update W-2s. There was incentives that were done through cryptocurrency, and you have to do some market valuation, and you have to look at it from a property perspective as well, but it does add value to your compensation. And then the other one was really on this page really is around the California sexual harassment requirements. I think really this impacts your training budgets for next year, right? So if you've got or not for next year, but for the upcoming years, but you got to start to plan for it. If you've got 5 or more employees, you're going to have written policies around California sexual harassment, and if you've got and you're going to have to provide training. Today, that threshold is at 25 people, but that's going to lower and become more prevalent for companies and more of a burden. All right, so what else is changing? Let's go to the next slide. So here's another one that really happened this year, independent contractors. I'm sure many of you out there have independent contractors or have worked with independent contractors. There was some legislation here in the California State Supreme Court that was enacted that really put more clarification on the definition of an employee. And there's really some good news and some bad news in all of that. But the good news is the rules are clearer now than ever before. There's really no gray area or weighting of factors, and it's really incumbent upon both the contractor and the company to make sure that they're following the rules of the classification. So let's just talk about this 3-factor test. Hey, Scott, have you run into any of this before?
Not specifically with our business, but definitely with our clients. I mean, we have a number of clients in the sharing economy, which I think is really where this stems from, and maybe where there's some questions there. So I would say we've had clients that are definitely dealing with this issue.
Yeah, and it comes more prevalent the more, and I think there's some old sort of call it legacy sort of thought process around being a remote worker, or I'm able to use my social security number and still be considered a freelancer. It's my choice. A lot of that goes away in this. So let's just kind of walk through this. And it's an ABC test, but we actually flipped it around because it's really, it makes more, the first 2, C and B here, make it more decisive on the first things you kind of encounter along the way. So do you own your own trade of, do you have your own independently or operate a trade or business of your own, right? Do you have your own business? And do you have a federal ID number, right? And here's a couple things. One is you can't use a social security number on any W-9. As soon as you do that, it's going to trigger some risk with the EDD, could potentially trigger an audit risk down the line. You want to make sure that that person that you're working with has a federal ID number. At the same time, you can't tell them to go and do something, right? You can't force them upon it, because that exposes you to some risk as well. The work that they're doing, the next test is the work that they're doing outside the normal course of business. So in other words, if you're in the business of a software as a service company and you've got someone coming in to help you with accounting work, that tells you that the person doing the accounting work is probably not doing the normal trade of business. But again, they should already have their own federal ID, and they should be doing something different than your business is doing today. And the last one is something I alluded to at the beginning of this is the worker told where, when, or how to do the work? So in other words, are you exerting a lot of influence on them? The easiest way to really understand that is, are they setting their own schedule? Are they coming, going as they please? You're basically setting out, hey, here's my deadline. You come back to me with my deliverables. That's a really good, clean way of doing it. In this economy, as I mentioned before today, if a worker is remote, you can't really assume that they're going to qualify under this. You got to make sure that they've got their own set of deliverables, their own work to do. Clearly, you have to be prescribed that if they're working on a project for you, but you cannot sort of tell them, hey, you have to be here between 8:30 and 4:30. You cannot exert that level of influence over them. and what's the risks, right? So the risks are one of the things that we've seen with some of our clients. The contractor or freelancer, if they're using if they're potentially still using their Social Security number, they may go and file for unemployment, and that's a big no-no, and that can trigger an EDD audit. So the safest thing to do in any of these situations is really to make sure that you've got an individual on your payroll system, and not to pay them through your accounts payable system. That is one of the best ways to make sure that you're taking care and managing the risk around these independent contractors. Scott, any thoughts?
No, David. I mean, I think it's just something that, again, we have to be very conscious of, or clients, we have to be very conscious of, and make sure that we're managing this. Because I think a lot of our clients are using independent contractors in one way or another, or consultants, if you will. Especially in early stages of the company's growth. So just making sure that you have some of these tips and tricks, and then, making sure you're not exerting too much influence. So, go ahead.
Oh, no, I was going to say, and one of the best ways is to have a documented policy about it. We'll talk about some of that a little bit later, but have a documented policy that incorporates the ABC test. Share that with other leaders in your businesses who may be out there, whether they're production people or leaders of your engineering staffs or nonprofits that are working with seasonal workers. You've got to have these policies in place to be able to manage through that.
Yeah. So talking about some year-end compliance, and won't go through this in detail, a little bit of a takeaway slide here, but these are your due dates across the board. January 31st and April 1st are kind of the big one. For anybody who does any paper filing, February 28th and 25th is something to be aware of. So these are all your compensation information that we have to get out there, your W-2s, W-3s, your 1099s, and then the 3921 and 3922s. For those who aren't familiar with that, that's for any incentive stock option exercises. So now we're talking about equity compensation, which is always a fun and laborious topic at year end. But if you've had any incentive stock options that were exercised during the year, then you have to just make sure that you report the spread to the IRS, in addition to providing something to your participants. The note there with the nuance between incentive stock options versus non-qualified stock options is that incentive stock options, right, there's no tax at exercise. So, but there is an alternative minimum tax impact. So the reason we have to report it is that the IRS doesn't know about it otherwise, and so that's why there's this special form. Now, of course, just as a reminder, if you have any non-qualified exercises, it's going to depend on whether it's an employee or a non-employee that exercised. For your non-employees, it's going to go on their 1099. That income, that spread at exercise between the fair market value and the exercise price. And then for your employees, that's actually going to be W-2 ordinary income. So you want to make sure you track that. One other nuance, because we are seeing more and more what we call extended time to exercise, right, where you may give an employee or a former employee 1, 2, 3, 5 years to exercise their award after termination. If they earn the award as an employee and those shares were vested as an employee and they exercise, that income has to be reported on their W-2. So whether or not they were an employee in 2017 but they exercised in 2018, that income is W-2 income versus 1099 income. So just a nuance there to make sure you're thinking about that and remembering it. And some of the penalties, just to be aware of, right? Your late filing fees can be anywhere, from $50 to $260 per form in most of these cases. So want to make sure you get it on time. And then you also want to do right by your employees to make sure that they can get their taxes done on time, to give them their information right off the bat.
Hey, Scott, are there any technologies that you can recommend out there to help with any of the forms? A couple come to mind on the 1099s and W-2s, but anything for the 3921s or 3922s?
Yeah, I mean, we actually do all that. We can leverage and dive into if a client has an equity administration system, they can give us read-only access. We run the report and we provide the recipients with their information statements and the filing. So we're doing that all kind of on the back end through our system. Depending on what equity system you're on, some of the systems you can also do it directly through the system. I know ShareWorks and Carta are both systems that you can typically file through the platform, but you need an EIN number. So sometimes it's easier, and maybe I'm biased, but it's easier just to go through us. And the other challenge is that, as a reminder, you have to send you have to send paper forms to your participants on the 3921s unless they opt in. So that's a little bit different from some of the other forms. If they don't opt in, technically, and again, it's all about risk when it comes to the IRS, in my opinion, but technically, if they don't opt in to get electronic forms, then you're required to send them a paper form, which again, none of the platforms do, and that's where we can help. David, I don't know if there are other systems you want to mention to the group.
Yeah, I think most cloud-based general ledger applications these days, particularly ones we work with, have sort of the capability of creating electronic filing files for 1099s. For any of the 1099s on there, a lot of the payroll services will automatically file and distribute the W-2s on the behalf of your company. Most companies these days are using a payroll service of some sort. We provide all those services. The other tools that we've used is the one cloud-based tool that's out there is Track 1099, which will do all of that filing, all those filings, and do it all for you electronically. We use that here. If you need help with that, we certainly can take information, can take files. We actually helped interestingly for the ACA, you have to file 1095Cs. If you have more than 250 employees, you have to file it electronically. And the first year it happened, one of our clients had prepared all the paper documents, didn't realize they had to do electronic filing. So we actually stepped in right away and helped them and got them over the line with the electronic filing. So we can help out in any of those ways. Track 1099 is a great tool, but that's the one I recommend most.
1095C, that's a great call out. I would say on the 3921s, most of the payroll companies that we see aren't handling this because that data is not flowing into payroll directly. So that's a nuance that you would want to ask your provider, but we see that most of the payroll companies, I'm not aware, to be honest, of any of them that actually handle that, again, because it's not usually reported to them. So that's just something to be aware of. If you kind of just write it off like, hey, payroll's going to handle everything, that might be a nuance that they don't handle. Let's, David, talk maybe talking about payroll. Let's talk a little bit more about some of the requirements.
Yeah, for sure. And I think, and really, we kind of talked about some of the filing extensions. We talked about some of the penalties a little bit at a high level. So more and more, I think, let's go to the next slide a little bit, and guys can see some of the details around some of the penalties that we've outlined for you. And I think Scott was kind of nailed it on the head with some of these. I think the big thing here is really that some of these penalties can add up quickly, and particularly if you're and this is going to be a theme throughout this, but particularly if you're not in the cloud these days, right? If you're still struggling to do things on desktops and you're still struggling with forms out there, and you start missing deadlines, or you think you can put it off, you're really opening up yourself and your business really to potential risk. So some of these for larger companies, these penalties can add up very quickly and get really expensive.
The other thing I was going to add is just, I think, being organized. And again, I'm going to kind of go back to equity comp because that's sort of some of my background, and there's a lot of activity that goes on with an exercise, or if you have RSUs with a vesting and a release and a disqualifying disposition, there's different timing that has different implications on income, on what gets taxed at what rates. An 83B, if you're aware of that, that allows somebody to accelerate the tax on their award. If they early exercise, for example, they can file an 83B. So again, just being organized and having some processes and procedures, and we'll kind of talk about that, I think, in the next or in a couple slides. But I think having that tracked, right? Because a lot of times that exercise, is maybe just collecting a check in the moment, but there's that year-end component, and that's where we oftentimes see some, reissuances of W-2s or 1099s where, oh wow, now that we're going through the audit, right? Now maybe we're doing an audit in April or May, we discovered that there was this exercise we missed, or there was an exercise that was a non-qual instead of an ISO, right? Just to be clear on that, an incentive stock option is only an incentive stock option up to 90 days post-employment, right? So on day 91 and after, that becomes a non-qual and you have to withhold. So those are things that can drive, requiring corrected W-2s and just becoming, and that's not necessarily a late filing, but those are things that can cause your employees' tax situations to kind of go awry, and you want to think about.
Yeah, I think, and on the payroll side, and on the payroll side in particular, getting ready for next year, I think looking ahead, right? So you may have had to spend some, if you weren't properly ready last year, you may have spent some time cleaning things up leading up into January if you didn't get minimum wage set properly, or some of those things corrected right away. You may have had to do catch up payrolls. So this is a great opportunity to kind of sit down, really plan, look what's directly affecting your particular locations, because some of the payroll changes can be county specific, particularly here in California, or location specific, particularly here in the city of Los Angeles as well. It varies from between municipalities. So it's really important to kind of sit down there, understand where your employees are, what's going to impact them, get that information and get it ready, and get it ready to be loaded into your systems for next year, and do that planning now, because that'll save you a lot of work on the back end, amending W-2s, that kind of work, which those types of things is what really can lead to also some of the late filings and things like that. And then on the 1099 side, you want to go back and kind of take an inventory where you're at this year and say, okay, how many of these are independent contractors? How many of these 1099s do I have are based on Social Security numbers? And you want to do things now to sort of to make sure that you're anticipating next year and getting ready and get these potential freelancers off corrected and set up in such a way that you're going to have less compliance and risk issues going forward.
Yeah, the other last nuance, and then we'll move on, is so there are some different state requirements too. You talk about municipalities and obviously, but just from a timing perspective, the filing requirements, right, whether it's electronic versus paper, can vary from state to state. So that's another item that you want to consider. Yep.
So let's talk about some other compliance considerations. And I did talk about W-9 forms, but not, but really for all vendors, right? So making sure that you've got everyone's information, and you're clear on that everything's filed. Every vendor you have in your accounts payable system has a completed W-9 form. Resale certificates and sales tax, kind of big issues these days, right? There was a lot of changes in terms of impacts in 2018, carrying on to 2019. There was a lot of sales tax implications, most notably kind of the nexus rule. So no longer do you actually, and nexus meaning that you actually have a physical presence in a location in order to be eligible for sales tax. That requirement's no longer. So now, if you're selling goods and services into any state, the perfect example is Amazon, you're now eligible. You now need to be collecting taxes on those services. And what's happening is, in a lot of states, they're setting revenue thresholds. So maybe $100,000 or $200,000. It's very much it's different state by state, but that's what some states have done to sort of set thresholds so it doesn't become too onerous for smaller businesses. But it is establishing criteria so that companies can respond and collect the right level of sales taxes and remit them back to the governments. And then on the resale side,
I would just say that's a big, right? That's a bigger and bigger issue. Understanding your nexus is really important. And if you haven't done that analysis for 18 and you're continuing to expand going into 19, I think that's a huge one. The other, which we just had a client recently reach out to us about this, is internationally as well. Right? What international jurisdictions, similar to U.S. kind of state jurisdictions, do we need to be registering in and getting all the compliance set up for? So I would say that sales tax one, it's a high risk area. And if you're starting to really kind of ramp up and you got that hockey stick from a sales perspective across the country, that's an important one that should be probably part of your 2019 planning.
For sure. And then the other things that are taking place really around city business filings, business property tax filings, disqualifying disposition tracking. So making sure that you've got those dates scheduled, you know when they're happening, you've got a calendar or a work plan or a workflow tool, something in place that sort of will be an automatic reminder of those dates. Many of the cloud applications today, some of the GL packages provide that capability out there, so you can kind of set those reminder dates right in the application. So if you're on those applications every day or on your dashboards in some of those applications, you can have those reminders sort of pop up right away for your own business and make sure that those filings are taking place in a timely basis. Obviously, you're not waiting until the last minute. You're getting 30 days in front of it so that you're getting the information together and filing it on a timely basis.
Yeah, I was just going to say, I mean, things like moving during the year, right? Or if you're going to move, those are things that kind of trigger some of those city business filings. And then on the disqualifying dispositions, right? Again, going back to some equity comp, if you're a private company and you've done any sort of secondary or tender offer where people can buy back shares, again, depending on how you've handled that, that's most likely a disqualifying disposition. Or obviously for public companies. And then, so this applies to incentive stock options and employee stock purchase plans. Whenever somebody has a disqualifying disposition, you have to report that on their W-2. You don't withhold taxes, but again, you have to report it on your W-2. And as a company, you're required to sort of try and find that out, if you will. And so, what we advise clients is just to do a survey. Again, if you're a small private company and you don't really allow our employees to sell, or if you have a right of first refusal, you probably know who's selling and who isn't. But if you have a larger population or there is a lot of transactions out there, you just want to do a survey. We call it a disqualifying disposition survey. You would want to do it right now, right, as soon as possible. And ask people, hey, have you sold any of your incentive stock options or your ESPP shares? Some of the broker platforms also assist with tracking that, and some of the equity admin platforms as well. I guess I jumped a little bit ahead of myself. So here's the slide ultimately kind of talking through that. There's 2 years. You basically have a holding period. It's the greater of. You have to satisfy the greater of 2 years after the ISO is granted, and 1 year after the ISO is exercised. So, for example, if it's granted in 2015 and I exercise in 2017 and I sell in January of 18. Then that's a disqualifying disposition because I didn't hold it for 1 year after exercise. So again, we recommend doing surveys and tracking that. And then similarly for the employee stock purchase plan, 2 years after the grant date, so the beginning of the offering period. So we're gonna go ahead and jump into polling question number 2, and this is yours, David.
Yeah, let's do it. So here will lead. Here's the next question here. So, which of the following will lead to Scott being treated as an independent contractor? So, first, he owns and operates a business with a federal ID number. 2, he's providing a different service than your company. Scott is working remotely and in the office. Or 3, all of the above. Which of these will lead to Scott being treated as an independent contractor?
Yeah, it looks like folks are thinking this one through, and that's good. There's and
it's a little tricky, but not that tricky.
And we'll give another about 10 or seconds or so. Looks like we got about, we got a couple more votes still coming in, and we'll go ahead and close that poll.
Wow, interesting. All right, 62% of you got it right. All of the above, right? It's got to be all of them, right? You have to pass, you have to qualify under all 3. The one I thought that would trip people up is Scott works remote and in the office. Clearly you all were paying attention, but as long as he's coming and going as he pleases, that's another factor that will lead to being an independent contractor. So all the above is the right answer. So
yeah, I think the nuance there, just to kind of call out, right, is that just because I have my own business and I look like a independent contractor, if you're telling me where to go, when to be there, and such, and ultimately if, I'm providing the same services you are, right? So I'm just kind of working underneath you, if you will, and you're maybe lending me out or whatever it might be. There's some nuances there. So it's not black and white with that A. So, David tricked some folks there, but let's talk a little bit about infrastructure and kind of planning, and again, thinking about, going in 2019, nicely buttoned up and getting ready for an awesome year.
Yeah, tell me a little bit about what you're telling your clients about some of about their policies and procedures. Have you talked to them about any of that?
Yeah, we're talking actually to more and more clients. We're seeing this. I mean, because this has become sort of an audit risk, and it's an item that clients are seeing as an opportunity, really, to gain efficiencies, right? So the challenge, I think, with some of the stuff that we talk about is there is the upfront investment, right? The time, but once clients recognize, hey, I make the initial time investment, this is actually going to save me time. It's going to create efficiencies. There's no duplication of processes. We identify who's accountable for what as part of this. So we're seeing more clients wanting this. And again, we recognize, right, it's all about the stage of your development and where you are as a business. But I would say, especially kind of the mid-sized companies, smaller mid-sized companies and beyond, this has become just one of the ways to just operate your business so much more efficiently, faster close process. When somebody leaves, again, it's a hot market out there. Turnover rates are still pretty high, meaning that people are going to the next company. You have documentation. You can, I don't want to say plug and play because that makes our staff seem like, objects, but I would say you're able to get somebody up to speed a lot faster. And in other ways, you can also promote somebody from within, even in a way that maybe they're not 100% ready to go, but they're able to take on the documentation or the process, or they've learned from somebody by shadowing and documenting the process. So I would say that's a big one. And then the year-end mini audit, this is huge. Doing reconciliations. We're talking to a lot of clients about, reconciling systems and getting aligned, right? There's HR systems, there's equity administration system, there's payroll systems. How do we get all 3 of these systems aligned, and buttoned up as we go into 2019? So that's what I would say. And on the next slide, I'll talk about some of the specific processes. But I don't know, David, if there's any other things you want to add.
Yeah, I just want to interject a couple things there. And I think one is 100% agree with you. And I think as we're going to talk about some of the policies that have changed over the last couple of years and becoming no longer, I got to think about it, I now got to do it. This is a great opportunity to make sure that you've got documentation in place and ahead of whatever audit or other board requirement or internal requirement that you need to have. And just as Scott said, just to make sure that you've got policies and procedures in place for the next person coming in who can really just kind of pick up and run with it. So I think, but for me, the other pieces of this, going back more broadly, were the infrastructure planning and being in the cloud. So for those of you on the phone today, if you're still on desktop applications, right? If you're still on desktop applications, you are behind, right? It is everyone, most businesses now are in the cloud. If you are not in the cloud, you're creating risk. It is literally safer to be in the cloud. The encryption and security has far surpassed any data security that you can have on desktop applications. And I'm not only talking about the accounting applications. To Scott's point, the HR application, the Salesforce, your CRM application, your payroll applications, anything that the way you share and move files around between customers, right? We use Box and Dropbox, and we use a number of different tools today, ShareFile or other tools that I've seen out there, because email, moving sensitive data across email is tremendously risky these days. So it is really important that if you are still on desktop applications, or you maybe only have a portion of your business, maybe you've already taken that first step and gotten your accounting application into the cloud, which is a fantastic step. Look around your business, partner with the other leaders in your business, and identify where those other risk points are. It could be in an HR system. You could have a bunch of things sitting around in spreadsheets somewhere. The more you can put into the cloud, the less risk you will create for your business, and less risk of data breaches that you will have going forward. Right. So the planning's not only around the accounting policies and procedures, but just in the fundamental way of how you're operating and managing your business.
Well, and I think that's important as you think about budgeting and you think about systems, and right, you can't do everything at once, but how are you going to scale into that? But I would just add kind of on the component of security, right? If you think about, you have to invest a lot in your personal kind of cybersecurity to be protected, or security, right, to be protected, whereas you have a cloud provider, right, that is maybe hundreds or thousands of clients, and they're investing tons of money to protect all of their clients, right? And so just from an economics perspective, you can't really do as good as that cloud provider on your own in any sort of cost-effective way. So just some of the processes, and we'll just go through a couple of these, but I mean, these are the ones that we really focus on from the key procedures that we recommend having documented, right? And I'd say some of these clients have a really, really good idea where you go in and say, hey, what's the order to cash process? How do we book that? And it makes a ton of sense, and it's pretty easy. I would say areas like the acquire to retire for tangible assets is sometimes the depreciation process and the write-offs, and how are we handling that? Definitely on the budgeting and planning side, being able to actually track budget to actual on a rolling basis. We don't see that's a step above, I would say, as well as the ability to reforecast, right? So and again, there's the old adage that once I put a plan in place, it's stale tomorrow. Well, hopefully that's not true, but I would say being able to reforecast every 3-6 months, whatever makes sense to your business, I think that's really an important kind of component that is necessary and important for clients to have. On the treasury side, right, obviously, managing your cash flow and your investments, and then equity compensation, dilution, all of those components become really important, I would say, for clients. I don't know, David, if there's others that you want to touch on at all.
No, I think you covered it all. I think on the order to cash, I would say there's some complexity around that, particularly within revenue recognition, and particularly with software as a service companies. I know you're gonna touch on some of that right now, but this is, particularly with some of the new revenue recognition rules, it's really important to make sure. Again, if you just been focused on getting the process implemented and getting the tracking implemented and making sure everyone from your CEO to your COO understand the impacts of those changes, and you've been focused on that. Now's the time to get that documented so it's ready for your upcoming audits.
Yep. And I would say, the other thing on the revenue side, right, is kind of, thinking about even contra revenue. And we've actually seen this a little bit more in recent times where we have arrangements, maybe it's an equity arrangement with warrants or some sort of arrangement with a customer. And that's oftentimes leads to this contra revenue, or the ability not to recognize everything up front and to have to discount and things like that. So again, understanding that and having a process around that and thinking that through maybe before or as we grant unique derivatives or instruments to folks, I think is an important part of this. So kind of talking about, we talked about Rev Rec and we're not going to dive into this. It's not the sort of goal of this conversation, but we did want to kind of talk about being prepared for and adopting new guidance. There's a number of key areas, whether you're for profit or not for profit, and the dates here are your fiscal year, starting after this point in time, right? So 606 is for private companies, really kind of your 2019 fiscal year. Is sort of or it could be 2020 depending on where you're going. But if you're starting 1/1/19, that's going to be kind of where you need to be leveraging 606, 842, which is the lease accounting standard. The big thing on the lease accounting standard is a lot of your off balance sheet leases are going to go on the balance sheet. So that's a big issue and we're talking about all leases, right? So historically, you've had capitalized leases and operating leases. Now everything, I don't want to say everything becomes a capitalized lease, but to some extent, everything goes on balance sheet. So we're talking about copiers, printers, real estate, the whole 9 yards. So it's definitely a big issue. There's a new stock-based comp a standard that basically the FASB has been trying to align with IFRS on stock-based comp, but B, also trying to simplify things a little bit. And sometimes when the FASB tries to simplify things, they don't actually do a good job at that. But I would say this new ASU 2018-07, which by the way you can't adopt until you've adopted 606. But it basically allows you, instead of marking to market your non-employees, your consultants, your advisors, it allows you to just value them once and not revalue them, not mark them to market. Again, assuming that it's equity classified. So that's something that's new and will be nice for companies to adopt. And again, you can early adopt these. And then the last one is the not-for-profit standard, which again, I think most folks had to adopt this year, 2018, but perhaps you haven't finished your 2018 financials and you're planning to adopt early in Q1 of 19 before you finish your 2018 financials. So that might be it, but it's basically revising some of the net asset classifications, liquidity and availability, expense reporting, some of the statement of cash flow. So it's the largest kind of impact to nonprofits for probably over 20 years. So I think the big takeaway here is, understanding at a high level, at a minimum, how this will impact your accounting, right? So again, part of budgeting and forecasting, if you are reporting on a GAAP basis, obviously cash flow is different, but understanding what that's going to mean. And then if there is an adoption that you're going to do in 19, making sure you budget for that, whether it's just the accounting or if it's the process of updating your processes and policies, procedures. If there's systems, right? There are Rev Rec systems out there. There's lease accounting systems out there. And then planning for the time, right? How are you going to dedicate the time and effort to be able to do that? Anything else you want to add to that, David?
Just a couple things. I think just the lease accounting one is to me, well, they're all impactful, but this will impact every single almost every single one of our clients. Like you said, it's basically takes every operating lease that may have been mentioned in a footnote before and moves it up to the balance sheet. It brings some of those other smaller, inconsequential leases that you don't think about on a day-to-day basis, like the copier lease or the printer lease and those types of things, and brings them front and center. So it just adds an element of complexity in the accounting, and there are tools and services out there that can help you make that less burdensome on your internal organization. And I think the other one is the nonprofit standard for us. And just going back to the fiscal year piece is a lot of the fiscal years, a lot of our clients, the fiscal years ended on June 30th, 2018. So now, they're probably a few months into making this change. A lot of nonprofits, report to their boards on a quarterly basis. So they may have just stumbled through the first quarter, and they're really kind of getting ready to tighten up where they are in that process on the next quarter. So it's really it's really important that again, you're planning out into next year. Your policies and procedures reflect a lot of these changes, and that's it.
Yeah, no, David, thank you for calling me out on the nonprofits. That's definitely not my forte, so I appreciate the clarification there, right? Yeah, because again, it's going to be if your fiscal year is starting after December 15, 2017. So one of the, again, topics that we've talked about is around cybersecurity, and just wondering how many folks are thinking about this and planning for it. One of the, and we'll leave the poll open for a little bit. Let's see. Yeah, we'll give some folks some time. But are you heavily thinking about this? And if so, great. I think that's important. Is it part of your plan? Are you not really planning to address it because maybe your business model or something, or have you already addressed it? I'd say if you have already addressed it, I think it's one of those things that's never ending, to be frank. But hopefully you have a plan and you got a process in place. You maybe have the rules and the technology in place to help protect you, or to outsource the protection as well.
Yeah, I think Scott's right. I think it is never ending. And I think part of that plan is having a roadmap, right, that goes, from year to year, and that roadmap should also be part looking back, like once you've made decisions in your 3 years down the line with a security protocol that you put into place, it's going to be time to revisit it again, at least in that short term.
Yeah, so thanks everyone for filling that out. It looks like about that's great. 58% saying, hey, it's part of the plan, and 21% saying yes, we're heavily invested. One of the other notes I should mention, we don't have a slide on it, but there is also the new California Privacy Act, California Consumer Privacy Act, the CCPA. And that's huge, right? So I call it the California GDPR. It's actually a little bit less strenuous than the GDPR. If you're familiar with GDPR, is the European privacy rules. I was just talking to our privacy expert, and he was saying, yeah, you can call it California GDPR, but it's not that strict. But you have to adopt that by 1/1/2020, and really what it's going to require you, amongst other things, is to understand what you're doing, how you're using consumer data, be able to stop either using it or selling it or giving it away, etc. So that's a really important component as you kind of plan into 2019. Let's go on to the next slide. So just a couple quick items on equity compensation, if this applies to you. These are some, again, year-end kind of considerations and planning considerations. For your valuation, right, and thinking about your common stock valuation, making sure your projections are defensible and aligned. Is your peer group are they all still public? Are they all still relevant, right, when you're talking about peer group volatility? And then thinking about your time to liquidity liquidity in that process. We have a lot of clients that do 1231 valuations, and it makes sense if they're year end. But those are some things that you want to think about as you go towards year end. And then on the equity side, on the forfeiture rate, are you still applying a forfeiture rate? You don't actually have to under the old 2016-09 guidance. You could eliminate the forfeiture rate and save yourself that hassle. Again, volatility, does it tie back to your peer group? And then liability classified instruments, you have to make sure that you're revaluing those. So a little bit jumping through that quickly because we have a great kind of slide to kind of summarize some of the general audit considerations. But those are the top, I would say, equity items as you head into kind of year end to be thinking about.
Yeah, and this you can really kind of take away also as a checklist. I hear phones snapping photos right now as we speak. But in all seriousness, I think one of the key things we talk about.
Slides, David. They get the slides. They don't have to take a picture of the screen.
Oh, that's good to know. That's good to know. So those you can put your phones away right now. No, but the really important thing and we've talked a lot about this, but I think one of the really key things we haven't talked about is, and it goes to kind of trust but verify, is bring your CEOs or COOs into this process, right? Help them. I know it's really hard because I've definitely been where many of you are, and it's really important that you bring them into the process and you sit down with them. Ideally, on a best practice level, is on a quarterly basis to make sure they understand, where the cash is, how we've gone through the reconciliations, that things are buttoned up, that the balance sheet is a fair representation of the position of the business at that point in time, and talk about any issues or anomalies that you have. And it's a great opportunity then to really, you don't want to spend an hour and a half talking about bank reconciliations and intangible asset amortization, but it's a great time to talk about cybersecurity and disaster recovery plans and what you need to do to be in compliance on a number of whether it's HR issues or consumer data issues that are happening now or coming soon. So I think you got to use these opportunities to really, it becomes an opportunity to talk about the business and to create that roadmap for moving forward.
Well, I would say just to add to that, I think it's also the opportunity, right? We talk about the CFO evolution and elevating yourself. Obviously, we have to do our day job of the accounting and getting the books, et cetera. But being able to elevate yourself, as the key accounting or finance person into the operations of the business, right? And not just focused on all the items on the left of this, chart, but also the items on the right? I mean, disaster recovery, internal controls, compliance, backups. Those are things that you should take a position in and understand. Hey, what is our process? How do we handle this or that? So I think it's another way to elevate yourself as a key finance accounting executive.
Right. So in the last polling question, as we have just a couple minutes left here, which accounting standard adoption will you focus on the most in 2019? So what is it going to be? Revenue recognition? You plan to spend a lot of time on tracking your copier leases? Will it be something around share-based compensation? Will it be for those of you who are either work for nonprofits or maybe part of an advisory board as part of a nonprofit? Will you be focusing on that standard this year, or you have all this buttoned up and you're ready for 2019?
All right, we're going to leave the poll open for another about 5 seconds. We got, there we go. We got most of the audience. Hopefully you got this fourth polling question, and let's go ahead and close it and we'll view the results. So it looks like we have about 38% of the group looking at revenue recognition, and then a split between lease accounting and the nonprofit standard. And oh, by the way, the lease accounting also does impact nonprofits, by the way. So,
sure.
And then none of the above, a small percentage there. Well, if you have any questions, please feel free to chat them. It looks like we have one or two, but we'll have to email you those answers because we are at the top of the hour. And this is our contact information. David and I love to meet new folks and help as needed. So feel free to reach out if we can be of assistance or direct you to the right person within Armanino or within our network outside of Armanino. We're happy to help. So thanks again for your time this morning.
Yes, thanks everyone. I really appreciate your time today, and please feel free to reach out if you have any questions.